All right, Disney's after the bell. One of the worst Dow performers, as we said. There's the stock, $107. Pete, you own Disney. Tell me about what your expectations are here.
Well, it all comes down, Scott, to are we going to be focused on just the streaming and the effects that obviously the negative effects that have come from Netflix that affected Disney and many of the others in the streaming world? Or are we going to look at the entire composite of what Disney's giving us? Because I think if you look at the entire composite, it's going to be a lot more positive than people think. But if the focus is directly on streaming, then I think we're going to see a little bit more of the pressure to the downside for Disney. I really look at it, Scott. They've been hammering the stock. There's absolutely no doubt about it. I thought that when I was buying it earlier that I actually had an opportunity there. It's continued to go to the downside, and it doesn't feel like it's a bottom yet. But I think it's all about what are people going to be focusing on this report this evening.
Well, why shouldn't you be focused on streaming? It's like you're almost insinuating that don't focus on the area that is the place to focus most on. I mean, that's the primary growth engine. Of course, you know, the parks and other things are going to be strong. Yeah. But it's the streaming where the bread is going to be buttered in the years ahead.
Well, I think you're partially right. I think we had that big jump, right? The stock was trading at about $1.50. It went all the way up to 200 because everybody was so excited about streaming. Well, then all of a sudden we started to realize, hey, maybe a little bit too much is baked into this thing at this point in time. It stretched the PE, all of those kind of things. So it then dropped back again. When it dropped back again, that was the opportunity, I thought. But now that just continues to be only focusing. And I say that honestly. I think people are only focusing on streaming. Yes, that is the future to some degree. But let's not be so blind to the idea that the parks are absolutely jammed, Scott. They've got movies that are coming out that people are very excited about in terms of what's in the offing as we get into summer. There's a lot of different parts of Disney other than streaming that I think people should be focusing on, and it's continuing to open more and more. I think there's a lot of reasons to be bullish on Disney right now.
Degas, are you bullish? You own it.
Yeah, we are bullish, and I agree with Pete. It's been very frustrating to be a holder of this stock. But, Scott, to the point, the streaming only makes up 25% of their revenue. So what we're looking for is the entire story around Disney. And we're looking for about $1.20 for this quarter. If they hit that or greater, I think it's going to be a good opportunity to be an owner of Disney.
Yeah, but you're reevaluating. I mean, you're bearing the lead a little bit, aren't we? I mean, you're reevaluating the position.
Exactly, because ultimately what we're looking at is that if there's still a focus on the streaming, as Pete just laid out, it won't be good for the stock in the near term. The next 1 to 2 quarters, we're going to still be going down if it's only talking about streaming. If we can expand the discussion around and see how they're doing in those other parts, in the parks, in the cruises, and also in the other media properties they have, that's what we're looking for Disney, because Disney is a great play as we get into this reopen. That's where we will have to get the market to really focus on. But if we don't get market sentiment going that way, we can't fight the market. And so we will be reevaluating this position after the print tonight.
All right, Joe, any interest?
Well, I think that the focus has to be on streaming. I disagree. And the reason it has to be on streaming is because that's where you value it as a growth company. If the streaming business is not going to give you that type of growth, then you're going back to a valuation that's more reflective of a traditional media company. So I don't see how you can't look at streaming.
Pete, just respond to that real quick. I mean, frankly, I think it's a good point. Right?
Yeah, I think it's an interesting point. I think that the reality is this. Disney was Disney for what they were for a long period of time. We even talked about and kicked around the desk for a long time. Should they have bought Netflix? They had opportunities to, and they didn't do that. I'm not saying that you have a blind eye to this. Obviously, this is something very important. As Degas points out, it's 20+% of the revenue. But let's think about the rest of the revenue, and I think that's the important part. Yes, this is a growth piece to it, but one of the things that I think that played into this whole thing with Disney was, hey, look, it got overpriced because of streaming. Now I think it's underpriced because of streaming. And I think if you look forward, you'll see that where the PE is right now, based upon what we hear tonight, this is going to be a very, very inexpensive media company.
All right, we'll see what happens. Again, in overtime. Numbers are going to break. We'll give you the stock reaction and the analysis from people who own that stock after the earnings come out. You just heard from those who own it before.